In a world where cryptocurrencies are facing unprecedented turmoil, today's top story highlights a staggering $13 billion paper loss in Bitcoin holdings. We'll also look at significant market movements in Ether and XRP and explore the legislative efforts surrounding cryptocurrency regulation. Here are today's top 10 stories you need to know. Bitcoin is currently testing the crucial $59,000 support level amidst rising volatility in the cryptocurrency market. After dipping below the June 5th low, Bitcoin's price touched $58,150 before making a slight recovery. This volatile situation has led many traders to speculate whether Bitcoin can maintain its footing in the $50,000 to $60,000 range. Analysts warn that continued selling pressure could send Bitcoin towards $49,000. The dominance of stablecoins in the market reflects a risk-off sentiment among investors. Observers suggest that if Bitcoin fails to hold this support level, we could see a further decline, which raises concerns for both traders and long-term investors. As the market remains uncertain, all eyes are on Bitcoin's ability to recover this crucial support. The coming days will be critical as traders watch for signals of a trend reversal or further decline. Ethereum, alongside other altcoins, has been significantly impacted as it leads a broad crypto sell-off. Bitcoin's struggles have compounded the downward pressure on Ether, XRP, and Dogecoin. With the broader market reflecting a downturn, Ether recently saw substantial losses, falling harder than Bitcoin. The cryptocurrency market is currently plagued by fears stemming from a renewed rout in technology stocks, which has further weakened risk assets globally. As Ethereum's price fluctuates, observers note the importance of key levels that could signal either a recovery or a deeper plunge. The current market situation underscores the fragility of investor sentiment toward cryptocurrencies. Analysts suggest that until a clear recovery signal emerges, Ethereum may continue to face selling pressure. The coming week will be crucial for Ethereum as it attempts to regain lost ground amid ongoing market volatility. The cryptocurrency market is facing significant hesitation from institutional investors, primarily driven by ongoing regulatory uncertainties. Recent political turmoil surrounding critical legislation, particularly the Bipartisan Clarity Act, raises crucial questions about the future of crypto regulations in the United States. This legislative impasse, especially the refusal to sign bills that include a central bank digital currency (CBDC) ban, could further deter potential institutional investment. Analysts emphasize that without clear regulations, the market may struggle to regain its footing and attract larger players. The current climate reflects a cautious approach from institutions, which are understandably wary of entering a market that lacks a robust regulatory framework. As discussions continue in Washington, the crypto industry is actively advocating for a legislative solution that would foster a more inviting investment environment. The outcome of these deliberations will significantly shape institutional interest in cryptocurrencies, potentially paving the way for renewed investment momentum in the coming months. The cryptocurrency landscape is witnessing significant financial distress as Strategy reports a staggering $13 billion in unrealized Bitcoin losses. This alarming figure not only highlights the company's struggles, but also emphasizes the risks associated with concentrated investments in cryptocurrencies, which have seen unprecedented fluctuations. The market's volatility has been particularly harsh on major tokens like Bitcoin and Ethereum, leading to drastic price declines. Strategy's losses now exceed the market caps of numerous smaller cryptocurrencies, including Dogecoin, underscoring the depth of the crisis. As the industry grapples with these losses, the implications for investor confidence are profound and far-reaching. Market analysts are warning that these unrealized losses could trigger a broader sell-off if confidence does not stabilize soon. The significant paper losses serve as a stark reminder of the inherent risks in cryptocurrency investments, especially for institutional players. Stakeholders will be closely monitoring upcoming regulatory developments that might influence market recovery or further decline in sentiment, as the future remains uncertain. XRP, the cryptocurrency associated with Ripple, has faced intense market pressure recently, with prices dropping significantly. The altcoin has seen a decline of 4.9%, bringing its value down to $1.03, which translates to an 8.5% loss over the past week. This downturn comes amid broader turmoil in the cryptocurrency market, where many altcoins have struggled to maintain their value. XRP's performance starkly contrasts with Bitcoin's more stable fluctuations, leading to growing concerns among investors regarding its future viability. Various external factors, including declines in technology stocks and regulatory scrutiny, continue to weigh heavily on the crypto market. Analysts suggest that XRP must identify and hold crucial support levels soon to avoid further declines. The recent volatility raises significant questions about XRP's long-term sustainability as it grapples with fierce competition and market sentiment. Looking ahead, investors will be keenly observing whether XRP can recover and establish a more stable footing in an increasingly challenging environment. As uncertainty looms over the cryptocurrency market, many investors are grappling with fears of impending losses. Recent analysis highlights a widespread sentiment that a significant price crash could be on the horizon, particularly if Bitcoin breaks below the critical $60,000 threshold. This potential breakdown is concerning, as analysts warn it could trigger a cascade of selling in the market, further exacerbating volatility. The combination of political uncertainty, regulatory challenges, and market turbulence has created a perfect storm for investors. Notably, recent regulatory scrutiny from governments worldwide has left many uncertain about the future of digital assets. Institutional investors, who previously showed strong interest, are now weighing the risks carefully against the potential for recovery. This cautious approach may lead to reduced market liquidity, making price movements more pronounced. The coming weeks will be pivotal as traders seek to navigate this turbulent landscape. As the market reacts to both external pressures and internal dynamics, investors are advised to stay informed and adjust strategies accordingly, as the next few months will be crucial for recovery or further decline. In light of the current cryptocurrency market conditions, there is an increasing call for regulatory clarity from industry leaders. The push for the Clarity Act in the U.S. Senate aims to establish a more defined regulatory framework for digital assets, which have faced scrutiny and volatility. Advocates for the legislation argue that clear regulations could provide much-needed guidance for both investors and businesses operating in the cryptocurrency space, helping to mitigate risks associated with market fluctuations. With only limited legislative days remaining, the urgency for this progress is palpable, as many in the industry fear further regulatory uncertainty could deter investment. The crypto community is rallying behind the Clarity Act as a potential lifeline that could stabilize the market and restore confidence among wary investors. If successful, this initiative could reshape the regulatory landscape, fostering a more conducive environment for institutional investment and innovation. As discussions continue, stakeholders remain optimistic that a breakthrough could be imminent, potentially leading to a more secure and regulated cryptocurrency market by year-end. The cryptocurrency market is grappling with unprecedented losses, particularly highlighted by Strategy's staggering $13 billion paper loss in Bitcoin holdings. This shocking figure underscores the risks associated with heavy investments in cryptocurrencies, raising questions about the sustainability of such financial strategies. Strategy's losses alone eclipse the market caps of numerous smaller tokens, drawing attention to the concentration of risk in the crypto space. The market's volatility is evident as Bitcoin struggles to stabilize around the $59,000 mark, a significant decline from its recent all-time highs. Market analysts are expressing concerns that if confidence in Bitcoin erodes further, it could lead to a cascading effect across the entire cryptocurrency market, potentially impacting countless investors globally. This scenario emphasizes the urgent need for a more diversified investment approach, highlighting the inherent unpredictability of digital assets. Investors are urged to exercise caution as they navigate these turbulent waters, seeking signs of a potential recovery. As regulatory scrutiny intensifies and market dynamics shift, the future of cryptocurrencies hangs in the balance, prompting stakeholders to reassess their strategies in this rapidly evolving landscape. The cryptocurrency market is experiencing a notable increase in volatility, highlighted by the recent fluctuations in Bitcoin's price. After testing the crucial support level of $59,000, Bitcoin's latest price movements have sparked anxiety among traders and investors alike. This instability has raised alarms, as the potential for further declines looms large if Bitcoin cannot maintain this pivotal support. The broader context reveals that this volatility is significantly influenced by a downturn in technology stocks, prompting investors to reassess their risk exposure across various asset classes, including digital currencies. This trend is not isolated to Bitcoin. Altcoins such as Ethereum and XRP are also feeling the pressure, reflecting a widespread sentiment of caution among market participants. The implications of this volatility are profound, as it could lead to a shakeout of weaker hands in the market, potentially paving the way for a more stable recovery. Analysts emphasize the importance of closely monitoring upcoming price movements and macroeconomic indicators that could impact investor confidence. As traders navigate this turbulent landscape, the coming days will be pivotal in determining whether the cryptocurrency market can regain its footing or if further declines are on the horizon. Investors should prepare for a critical juncture ahead. In a revealing turn of events, Strategy has reported an astonishing $13 billion paper loss on its Bitcoin holdings, a figure that dwarfs the market caps of numerous well-known cryptocurrencies. This staggering loss highlights the intense volatility and risks associated with concentrated investments in the crypto market. Bitcoin's price currently hovers around the critical support level of $59,000, a threshold that many analysts believe could determine the cryptocurrency's near-term trajectory. The implications of Strategy's losses extend beyond just one firm, as they signal potential instability within the broader market. Historically, significant losses in the cryptocurrency sector can trigger a domino effect, leading to panic selling among investors. Analysts caution that if Bitcoin's price continues to falter, the resulting sell-off could exacerbate already precarious conditions. This situation underscores the pressing need for investors to adopt more diversified strategies to mitigate risks associated with single asset concentration. Moreover, the recent turmoil highlights the urgent call for clearer regulatory frameworks that can provide much-needed stability in the crypto space. As the market braces for possible further declines, attention will focus on upcoming economic indicators and regulatory developments that could impact investor confidence. In particular, the next few weeks will be critical in determining whether Bitcoin can recover or if it will face further setbacks. Thank you for joining us today. Which story shocked you the most? Let us know in the comments. Don't forget to like and subscribe for more updates on global news.